Good evening, all the joinees. Thank you for joining in. Hi, this is Ashi. Welcome to the webinar conducted by NGEN Research. Meanwhile, others join in. Let us have a look at today's topic. So today we'll be looking into how you can conduct an analysis of a mutual fund in comparison to the benchmark and peers. We'll then look into asset allocation, followed by understanding rolling return and rolling return distribution, followed by understanding drawdown and scenario analysis. Towards the end, we look at the reporting option available. Lastly, the forum will be open for a Q&A session. Please keep the questions related to the topic. Now, this is the landing page of the NGEN Markets. For today's webinar, we'll try to understand what are the multiple ways to load a single fund analysis. The very first method is using the fund section. Now, as soon as you come towards the fund section, this is the page wherein the screening and selection of mutual fund takes place. Within the fund section itself, you can find an option called filter categories. As soon as you click on filter categories, you would be able to see that there are 4 baskets representing SEBI asset classes and within which are the multiple categories that are listed. Onto the platform, there is no limitation. You can select as many categories as you wish. Now let's say you want to load the list of small cap funds. In that case, to load the list of 31 small cap funds, all you have to do is click on the checkbox against the name of the category. As soon as you do so, you would then be required to close this window. And here onto the screener, all of the 31 results are now loaded. Now, once the list gets loaded, it's a simple process to load a fund for a single fund analysis. Let's say you want to conduct a detailed analysis on Bandhan Small Cap Fund. All you have to do is click on the name Bandhan Small Cap Fund and you will see a detailed analysis is something that would show up in a separate window for that specific fund which you have selected. This is one method wherein the fund section is being utilized to load a single fund analysis. Now, the second method is using the compare tab. As soon as you click on the word or tool compare, you would be able to see that this is the landing page for the same. Now, this is the page that is being used for detailed analysis for list of funds. Let's say here you want to add a particular SEBI category. In that case, you can use this add group as a section and within which you would be able to see add SEBI category. Let's say you want to add list of large cap funds. You simply have to search for it and click. As soon as you do so, all of the 33 large cap funds along with the parameter wise information is something that would show up in the compare section wherein you can have a fund level analysis. This is the page wherein not only you can compare fund among each other, you can also compare it with the benchmark followed by category average as well. Now let's say you want to load a detailed fund analysis for Motilal Oswal Large Cap Fund. It's a simple exercise. You simply have to click on it. Again, as soon as you click on that particular fund's name, you would be able to see that a detailed analysis for that specific fund has started to load. So this was the second method. The third method to load a single fund analysis is using the search bar on the top. Now here you can see there are 2 search bar. One is search stock and second is search fund. Now let's say you want to conduct a single fund analysis on Kotak large cap fund. So we'll search for it right here. And I'll simply click on the name. As soon as you click on the name, you would be able to see that a single fund analysis dedicated to Kotak large cap fund is something that is being reflected onto the screen. As soon as this page opens up, onto the left hand side, you would be able to see some information related to that particular fund. For example, ISI and AMFI code, asset class, category, as well as the launch date. Now, right here, you can also custom your own start date in order to do a time period analysis. Now let's say you want to do a past 5-year analysis for this particular fund. Now in that case, you simply have to click on the word change, and as soon as you do so, you would be able to see there is a small tab that opens up. Now here you can custom your own start date, or what you can do is you can select from the given option. So since I want to do a 5-year analysis, I'll simply click on 5 years ago. Now the first tab that opens up is basically the fund performance. And within this fund performance, the first thing that you would be able to see right here is a graphical representation, which basically represents how did the fund perform versus to that of the benchmark. Here in the blue line, we can see that the fund performance is something that is being reflected, which is in comparison to the benchmark, which is Nifty 100. Now, let's say you want to change the benchmark, or let's say you want to compare this particular fund with the category average. In that case, you can use the benchmark section on the top right hand side. Now here, as we can clearly see, benchmark that is being selected currently is Nifty 100, against which the performance of Kotak Large Cap Fund is being compared. Now let's say you want to compare the performance of this particular fund against its category average. In that case, within this benchmark section itself, you can see there is a sub tab called NGEN. You simply have to click on it, and the second option right here is historical SEBI category averages. You simply have to search for it. So I'll search large cap. As soon as you click on it, you would be able to see the change in the graph. And here we can clearly see that this blue line, which is definitely representing our fund, is now being compared against the category average, which is large cap fund. So since we have selected a category average, all of the parameter wise information that you see here would also be in comparison to the category average versus to that of the fund. Now I'll change the benchmark to Nifty 100 again. So I'll move towards this NSE tab. I'll click on search Nifty indices and I'll select Nifty 100. Now let us try to look at certain parameter wise information. The first thing that we would be looking would be this cumulative return, which is absolute or point-to-point return generated by the fund versus to that of the benchmark. Here we can clearly see that the fund has generated a cumulative return of 137% versus to that of the benchmark generating a cumulative return of 122. Other than cumulative return, you can also take a look at the CAGR, which is basis the time period that we have selected. So this is past 5 years CAGR. Here we can clearly see that the benchmark has generated a CAGR of 17%, whereas our fund has been able to generate a CAGR of about 18.85%. You can also take a look at the annual volatility, which is the standard deviation of the fund versus to that of the benchmark. Here we can clearly see that the benchmark has taken an annual volatility or generated a standard deviation of about 14.4%, which is lesser when we look at the fund's standard deviation or annual volatility, which is about 13.72%. So we can clearly see that this particular fund, which is Kotak Large Cap Fund, has been able to generate a better cumulative return in comparison to the benchmark by taking a lesser volatility. This is something that is also reflected in the Sharpe ratio as well, which is risk adjusted return, indicating how well the fund is doing in terms of generating return versus to the risk that is being taken. So higher the Sharpe ratio, the better it is. And again, we can clearly see that the fund is having a better Sharpe ratio, which is of 0.85 in comparison to the benchmark, which is about 0.73. Other than that, as you scroll down, you can also see some other information as well. First is cumulative return, cumulative excess on benchmark, which indicates the alpha that is being generated by the fund, which is about 14.42%. This is derived by subtracting the cumulative return of the fund with that of the benchmark, and here we can clearly see the result for the same. Other than that, you can also take a look at the capture ratio. So first is the up capture ratio. Now this tells us how the fund was doing when the market was in bull run. Here we can clearly see that the fund is having an up capture ratio of 97.89. Now, if we consider that the benchmark was having an up capture of 100, it means when the benchmark was up by 10%, our particular fund was up by 9.7%. By clicking on this I button right here, you can see a month-on-month bifurcation for the same. Please note, only those months would be taken under consideration wherein the benchmark was generating positive return, irrespective of our fund generating either positive or negative return. And on top, you can see the overall return generated by the fund as well as the benchmark during the bull run. Exactly opposite is the down capture ratio. So down capture ratio talks about how the fund was doing when the market was in bear run. Here we can clearly see that the fund was having a down capture of 87.51. Now again, considering that the benchmark was having a down capture of 100, it means when the benchmark was down by 10%, our particular fund was down by 8.7%. You can again click on this I button right here to get a month-on-month bifurcation for the same. And again, please note, only those months would be taken under consideration during down capture ratio, wherein the benchmark was generating negative return, irrespective of our fund generating either positive or negative return. And again, on top, you can see the overall return generated by the fund as well as the benchmark. Now, other than this, if you want to check the holding analysis of a particular fund, you can use the asset allocation tab. Now, this is the second tab in the fund analysis. As soon as you click on asset allocation, the first tab that would show up would be the overview section. Now, in this particular overview section, you can see all of the holding information related to that particular fund. So their complete portfolio is something that is visible in the overview tab. Now here we can clearly see that this particular fund has 63 holdings and the data is as of July 31st, 2025. So please note our update cycle runs on a monthly basis, which is between 8th to 13th of every month. Now, if you want to check the holdings basis past few months, that piece of information is available under position over time. Now, as soon as you come here, you would be able to see there are certain color codings right here. Now, green basically indicates any kind of increase in the holding percentage in comparison to the previous month, whereas red indicates any kind of decrease in the holding percentage, which is again in comparison to the previous month. This information is also available in terms of shares as well. So for example, here we have one stock called ITC. For the month of June, we can see that the holding percentage towards this particular stock in Kotak Large Cap Fund was about 2.66%, which further increased, which is indicated in green in comparison to the previous month, which is to an extent of 2.87%. Now to check whether this particular increase was due to increase in the number of shares that were held or due to increase in the price, like I mentioned, this piece of information is available in percentage as well as in shares in lakh as well. So I'll simply click on it. And here we can see that the third item is ITC. So in the month of June, the number of shares that were held by this particular fund was to an extent of 67, which further increased to 72%. That explains the percentage-wise increase towards this particular stock in this particular fund's portfolio, which is Kotak Large Cap Fund. This information is not only available in terms of security, it is also available in terms of sector-wise as well. You simply have to click on buy sector as an option and the data is something that would get generated. So here we can see for automobile as a sector, for this particular fund in the month of June, the holding percentage was about 5.68, which further increased to 5.9%. Now to get more details in terms of what were the position added, removed, what were the largest increase and decrease, you can get this piece of information in position over time. So this is always in comparison to the previous month. You can click on the drop down and select the month that you would want to look for. So here you can get the list of what were the largest increase and to what extent. Similarly, the largest decrease in the fund's portfolio, again to what extent, and if there were any position added or position removed, which is also in terms of percentage. Now, the next piece of information that we would be looking upon in single fund analysis is basis the peers. Now, this particular tab helps you to understand how did the selected fund do versus to that of the peer within the category. The data that you would see here remain static and is since the inception of the fund. Now, let's say you want to have a 5-year analysis for the list of fund, which is in terms of peer comparison. So here what you can see is basically static information. To have a fair analysis, it is very important that you load this list of funds in the compare section. So we'll move towards the compares tab. Now again, the data that you see here is since the inception because a common time period is something that is not being selected. In order to do so, you can see there is a settings wheel icon right beside the word return column. Now to have a 5-year time period analysis, you'll simply click on the settings wheel and select the date accordingly. So I'll select 2020 third and I'll click on go. Now, what does it mean when we say that here you can have a time period analysis, whereas on single fund the data remain static is? Now, if I just arrange this in terms of alphabetical order, we can clearly see that the fund which we were analyzing, Kotak Large Cap Fund, has a 5-year Sharpe ratio of about 0.90. Whereas if you see in pure comparison, this particular same fund has a Sharpe ratio of about 0.57. So that is the reason the data that you see here remain static. To have a fair analysis, it is important that you load the list of funds in the compare section always. Now the next piece of information that we would be looking upon would be the rollings. Now rollings talks about the consistency of the fund, and here as soon as you come towards this particular tab, you would be able to see there are 3 rolling windows. First is 260, second is 520, and third is 780. Now 260 onto the platform stands for 1 year working period, 520 stands for 2 year working period, and 780 stands for 3 year working period. Now let's say if you want to change any of the rolling window, you can flexibly do that. Let's say you want to check for 4 years rolling window. You simply have to multiply 260 into 4 and input the number of working days right there. As soon as you do so, you would then be required to click on run so that the system can take it into effect. Other than this, you can also get or view the information in absolute or annualized term as well. Now, there are certain piece of information that you can find under rolling return statistics. Now, here for 260 days, we can see that the average rolling return is of about 19.6%. Meaning, if you would have held on to this particular fund for any 1 year between 1st Jan 2020 till 21st August 2025, the average return that you would have enjoyed would have been about 19.6%. Whereas the volatility logic remains the same, the rolling volatility that you would be required to face would have been about 14.8%. The highest return that this particular fund has generated, keeping in mind the rolling window of 260, is about 68.47%. You can locate the same onto the graph as well. So I'll just turn off the other two and you simply have to drag to get a clear view. And here we can see that this particular highest return was generated on 22nd March 2021. Meaning if you would have invested in this particular fund exactly 260 days prior to 22nd March 2021, you would have enjoyed a highest return of 68.47%. Similarly, you can also find the lowest return, which is in terms of negative 6.39%. This is also something you can plot it onto the chart and check exactly on what date was this negative return that was generated. So it was on 13th October 2022, wherein a negative return of 6.39% was being generated, which means if you would have invested exactly 260 days prior to this particular date, you would have been required to face a negative return of 6.39%. You can also take a look at the low percentage right here as the holding period increases, which is also in terms of positive. So as the holding period increases, you can take a look at whether the lowest return generated by the fund is reducing over the period of time or not. Similarly, if you want to check what is the percentage of time this particular fund can generate return between a specific range, in that case, you can use rolling return ranges right here. So let's say you want to check the probability percentage of a fund generating return between a particular range. So for example, there is a client that comes up to you saying that they have a target return range of 10 to 15%. So you would be required to input the range right here. So I'll input 10 to 15% and click outside the box. As soon as this is done, you can see that 13% is the probability that this particular fund can generate a return between 10 to 15%, keeping in mind the rolling window, which is for 260. Similarly, if you want to check what is the percentage of time this particular fund can generate a return, which is equivalent or similar to basic FD rate, you would be required to change the rolling window or the return range accordingly. So I'll just change this to 0 to 7% and I'll again click outside the box. And here we can see that 21% is the probability that this particular fund can generate a return which is about 0 to 7%, which is equivalent to a basic FD rate. Whatever data that you input in the return ranges is something that will get reflected in rolling return distribution bar chart as well. Other than rolling, you can also take a look at the drawdown as well. So drawdown talks about the strength of the fund in terms of recovering from the losses. Now, as soon as you come here, you would be able to see the details of top 10 drawdown. Now here we can see that there was a loss of 37%, which was between 24th Jan 2020 till 23rd March 2020, meaning 59 days. During this 59 days, the NAV fell from 257 to 162 and it took 164 days to recover, meaning it finally recovered on 6th of November 2020 from this particular loss of 37%. Onto the platform, if there are any ongoing recovery, that is also something that is reflected. Other than this, you can also find a bar chart representation wherein the gray section represents the loss phase and the white section talks about the recovery phase. Now, the next thing that we would be looking upon in single fund analysis is the scenarios tab. Now, scenario tab basically helps you to understand how did a fund do in comparison to the benchmark in any of the past event. Now, there are certain inbuilt scenario onto the platform, whereas you can also custom your own scenario as well. Now, let's say you want to check how did this particular fund do in first half of the year. So in that case, to add a custom scenario, you would be required to click on this option called Add Custom Scenario. You would then be required to give it a name. So I will give it a name as Jan to June. And then you simply have to select the start date. So we'll just select 1st Jan 2025 and the end date, which is the June end. Once this is done, you would then be required to click on Save Custom Scenario. As soon as this gets done, you just have to select the scenario that you have created. And here we can clearly see that the benchmark, which is Nifty 100, in terms of return has outperformed with 6.28%, whereas return generated by the fund was about 5.7%, meaning there was no excess return as such that was generated by the fund during this particular time period. That is the reason the excess return here is in terms of negative 0.57. Similarly, the volatility that was faced by the benchmark was about 15.41%, whereas the fund was to an extent of 14.75%. All of the data that you see here can be taken in different reporting option as well. First, we have here is a PDF as a reporting option. So you simply have to click on Create PDF. And a single fund analysis PDF report gets generated. All of the reporting option onto the platform comes up with co-branding on top left-hand side. So here you can see some basic information related to the fund, asset allocation, holding-wise information, exposure in terms of large, mid, small, and others, sector-wise exposure, performance chart wherein you can see the performance of the fund versus to that of the benchmark, monthly statistics, yearly statistics, and you can also check the drawdown and rolling returns as well. And last page being the disclaimer. Other than this, you can also take a PPT as a reporting option as well. So this is how the PPT report will look like once you click on it. In just one click, this will get generated quickly. And PPTs onto the platform remains editable. So here you can see the holding wise information right here. Second, you have asset allocation wise information. You can also check market cap exposure in terms of large, mid, small, and others, sector wise exposure, holding information, performance analysis of the fund versus that of the benchmark, rollings, drawdown, and last page being the disclaimer. Let's say if you want to add something, we have provided you with a master slide as well. You can anytime take a screenshot. So let's say you want to highlight this particular screenshot into the PPT as a reporting option. So you simply have to click on the screenshot button right here. Once the image gets saved onto your system, you would then be required to insert it onto the master slide that has been provided. And again, all of the reporting option comes up with co-branding. On each of the slide, you would be able to see your company name and logo on top left-hand side. So that's it for the topic related webinar. The forum is now open for a Q&A session. I would request everyone to keep the question related to the topic. If you have anything else that needs to be answered, you can put your number in the chat box. Our team will reach out to you.
Do we have option to export as Excel, the PPT and PDF you show? Can we export as Excel? Hello.
Yeah, hi. Excel exports are available. So you can actually see, but they are separately available. So here you can see on the top is the historical prices you can download. And also for asset allocation, you can download separately.
So can we download as a bulk, just like for multiple fund if I want to download? Is it possible to download?
Yeah, it's a bit limited because we're not allowed to kind of share so much data in one go, but there is a bulk download option in the compare section.
How many in a go we can download?
Probably about 50, 60. But again, the platform isn't meant for huge amounts of download because we are not a data provider. And we also have agreements with our data provider where we are not allowed to kind of share so much data in one go. But if you have a list of few funds here, you can download their holdings in one go or the stats.
Okay.
There's another question in the chat box asking if this can be done for a portfolio of an individual fund. So you can definitely do it for portfolio. So Ashi, if you can just run a portfolio and explain.
Yes, so the similar analysis is also available on a portfolio level. All of the information that you see here can also be taken in different reporting options like PDF and PPT as well. So whatever information that we have seen on a single fund level, majorly it is available on portfolio level as well, like asset allocation, performance, rollings, drawdown, and few other tabs as well.
Another thing to add here is you can click on the edit button and change the weightings of the funds in your portfolios as you wish.
May I come in for a question?
Please.
Yeah, hi. So Rajat this side, I just like to ask that when we do a comparison of portfolio, there is a limit of 20 names in either in PDF or PPT. So in some cases, we should also get an option to download in Excel the complete portfolio. That is one suggestion. And second is that the portfolio combines for equity and mutual fund in a similar table sometime when they do overlap, when they do this. So if there is a button provided that just compare a mutual fund or just compare stock or kind of that in report itself, then we are able to make a better judgment from this.
Okay, sure. So the 20 portfolio limit only exists in the compare section, where if you want a PowerPoint, then it's limited to 20. But if you have more than 20, you can still download the Excel. Actually, if you could load the compare section, so the main list, all these stats can be downloaded in Excel. And some of the other tabs also like rolling will have an Excel option download as well. Now, as for funds and stocks, you can add any fund, any stock here. When you're running a portfolio, let's go back to the portfolio section. So you can create a portfolio of funds and stocks in one place, and you can allocate accordingly. And again, all the analysis will be created according to that, even in asset allocation. Let's go there. It'll actually combine the equity and the underlying fund equities together in one exposure. So you can see how much is coming from direct holding versus how much is coming from through the fund.
Right. So if you download the PPT of this Walana, you
Yeah.
will see so you will see the 20 only. So if I need same analysis for the combined portfolio, where I can say the client has invested, say for example, 5.5 crores, and now it has grown to at 7 point some crores. So how can I look at that rupee terms and more than 20 stocks? There are two things.
Right. So more than 20 with the PowerPoints, currently we don't have the facility. The reason for that is it's not a technical reason, it's more of a design reason. Because as you can see, in the slide for the portfolio, it can't fit too many. Otherwise, you start to miss out on items. So as you can see here, for example, that table, for example. So more than 20, there's just not enough space, and then we have to shift over to more slides. So that's the reason currently it is set at 20. We can look at other ways to improve it. So this restriction is only for PowerPoint. If you
Yeah.
print a PDF, it will show only the top 10 holdings. It will not show
Yes.
the rest, right?
Yeah.
What we can do is, I think we've been working on it, is that there is a position list download as well, which shows everything right next to the PDF. So we are working on something where we can integrate this position list as the last page of the PDF report. That
Right.
way, even if there are 40 funds in the portfolio, the first couple of pages will show top 10. And then as you scroll down, there will be one page or 2 or 3 pages, however many pages it will take. It will list everything.
So
So,
for
yeah.
making a sake of simplicity and the thing, we can either provide a link. Say suppose in your existing PowerPoint format,
Yeah.
somebody wants to explore further, and if there is a link or something like button, then he can look at. So overall, your PowerPoint is just a 12 or 15 pages one. But somebody, if is only interested in XYZ data, then he should be able to enlarge and look at the complete thing.
So for that, my suggestion would be to use the share link because this gives them access to all of the portfolio analytics. This is a link that you can send to your client. The only restriction here is it will only work well on a big screen, like either a computer or a big iPad or something. It's not ideal for phones. For phones, we have a different sort of link. But this is the share links, and it'll work for anyone's, anywhere in the world. And then basically, exactly the same portfolio analytics will be available here as well. The other one,
Rajat, this is the most convenient way of sending portfolio analytics, and this is available for all the institutions. So normally they don't send PowerPoint presentations because this is very backdated kind of stuff. So people all send the this link, whereby the client can open the link and see all their portfolio analytics in front of them.
Hey, this is amazing. I was not aware of this share link that it client can see multiple things.
Yeah.
So
Without giving the
yeah,
login, you can send the link and they can open it as if they are using the login only.
wonderful. This is really thank you.
So could you please share it again how we can do that?
Sorry, we couldn't hear you. If you could repeat, please.
I'm saying, could you please show how we can do it? I'm trying it simultaneously, but
Yeah,
I'm
yeah.
getting different
So
options.
once you run a portfolio analytics and you come to and the analytics is
Yeah.
completed running, then on the top you will see two links. To one is a share link, which we just showed you. You click on it, it will give you some option. You check those options, and then it will give you a link which you can copy and you can send to anyone. And it will work for 7 days. One thing to note here is, Ashi, if you close this and open the share links, the top from the top, the manage share link button right next to settings. Yeah. So go to desktop links, because as I said, there are two types of links. So here you can refresh the links. It will hold all the kinds of links you've generated, right? And we'll also show you the mobile link if you want to send it to someone, let's say on a WhatsApp message. Then you click on this one. Ashi, just go slowly so they can see. So you see this one right next to improve client link. So click it. So this will open up, and this will actually create a mobile link, which will work quite well on a phone, right? And basically, once you have this link, you can actually send it to someone on a mobile phone, and it will open up on a mobile phone. I'll just do it again. I don't know, it's not loading. Run a portfolio. Okay, for some reason, it's not showing up here. But basically, once you create this link, go there. Try to load something from here. There it is. So that is what it looks like. So these are some of the links that Ashi has created before. This is a message which has a link and a PIN number. So all you have to do is you can copy this. If you want, you can use our WhatsApp facility, and you just put the target phone number here, and the target phone number will get this WhatsApp message on their phone. And when they click on it, they will see what you see on the right-hand side here. Yeah, just log in and show. Yeah, this is what it looks like. This is what it will run like on the phone. You can see the holdings, charts about the holdings. In analytics, you can see the actual backtest also against whichever benchmark you set. There is another link where you can see what the live markets are doing. And they can also send you a message on email. So they write their message here and send it to you. You will receive it on your email. So they are the two links that we have available for portfolios.
One follow-up question on this.
Sure.
Yeah, so as you said that there is some limitation in terms of PDF and PPT. So do you also have some limitations in this mobile link or the share link, or will it show all the funds or the schemes within the portfolio?
It will show all the funds. There is no limitation here. The only limitation here is the share link will stop working after 7 days. So you can come and, as we showed you earlier, you can refresh the time frame for another 7 days. And for the mobile link, you can create as many as you like. After a while, we have to charge you a small amount of money, but again, you can call up your RM and they can sort you out. But there's hundreds of link allowances here. And they will last forever. The mobile links will last forever.
Actually, I was trying this yesterday, not the links, but the PPT and the PDF for one of the portfolio of our client. But we were not able to generate that PDF or PPT. I tried while attending this meeting also. So if you want, I can share my screen and show it to you. I don't know what happened, but I am not getting any download out of it.
Just please share your number here and somebody will get back to you. And they'll give you on a separate call and check what the issue is.
Yeah, sure, we'll do that.
Thank
And
you.
one more follow-up question I have. Like,
Yeah.
for example, maybe we can consider this portfolio itself. So when it is creating this, it is having one benchmark which is being termed as this reference index number one rebased. Similarly, I was also getting some reference index number and being rebased. But how can we get to know that what exactly this benchmark is consist of, and what exactly it is being, how it is being created? If you want to know about that, how
Yeah.
can we come to know?
So
Yeah.
when you look at the search on the top right-hand side, where Ashi is showing you, you can see each reference index is basically a combination of Nifty and CISL bond index. So you can see
Okay.
which one refers to which one. And if you want to have a different benchmark, you can easily change the benchmark here.
Okay.
So these are not the only options. If you want to have the benchmark as, let's say, you just simply want to put BSE 500, NSE 500, you can just search from here and you can change the benchmark and the entire analysis will change.
Okay. And one more question which is clicking to my mind while creating. Am I audible?
Yeah, please go ahead.
Yeah, while creating the portfolio of my client, there were few schemes. Like it started like maybe 2 or 3 years back, right? But over here, when we see at the the section immediately right, immediately below PDF, there it is mentioned start date and the end date. It was taking the data from 2009 till 2025, but few schemes were initiated maybe 2 or 3 years back. So it was basically showing the portfolio of the basically the performance of the portfolio from 2009 to 2025. So how that being created, considering that particular schemes existed or launched just 2 or 3 years back? If you can throw some light on that.
Yeah, sure. Thanks for the question. So we have actually given our users options so they can decide what they want to do. So as you rightly said, if some screens were launched later, but the backtest is running for a much longer time, what you have two options there. One is, and that option you can choose in rescale weights. In the middle box, you can see. And Ashi, just click on the I button next to that. Yeah. So basically, if you click on yes, right, it will basically scale the remaining funds to 100%, scale it up to 100%, while the new funds don't have any data, right? If you select no, then it will allocate nothing. So if 20% of your portfolio is invested in funds that were launched only 5 years ago, and the backtest is 10 years long, then the first 5 years, you can either increase the weights of the remaining funds, remaining as in the ones that are old, which have data, or you can say, no, I want to keep that 20% empty and I don't want to earn any return. So you can decide that by choosing yes or no here. Because if you're going to run a backtest for 10 years, where two of the funds or a few funds are only 5 years old, you can either run the backtest for only 5 years where everything is available. Or if you want to run for 10 years, then you have to decide, do you want to scale up the remaining funds up, or do you want to leave the first 5 years empty for 20%? So you can make
Okay.
that decision by choosing this box here.
Okay. Okay. This is
Yeah.
helpful. Thank you. Thank you.
Thank you.
Hi, can you explain it again? In fact, this was my question also. My name is Amia.
Yeah.
Like when you select yes, what happens, and when you select no, what happens, and how
Sure.
does it? Like I understood, in case the newer scheme is 5 years old only, and then you can backtest it for 5 years. That's pretty
Yeah.
understandable.
Yeah.
But yeah, in case you have 2 or 3 schemes 5 years old and you are
Mm,
running for 10 years,
mm.
what happens actually when you take yes, and what happens when you take no?
Fine. So the no answer is very straightforward. If you select no, it means the two funds, let's say there are two funds that are only 5 years old. And let's say they were taking 20% of the portfolio. Then what will happen is in the first 5 years, 20% of your portfolio will return zero because those funds don't exist. So obviously, as a result of that, you will only be getting return from about 80% of your portfolio, while the other 20% is giving back nothing. So that might skew the results badly because it's not like in real life, you will invest less. So if you click no, the return from those two funds will only start coming from the fifth year onwards. So for the first 5 years will not show any returns for the 20% of the portfolio. On the other hand, if you click yes, what we will do is we will automatically scale up the remaining portfolio. So let's say the remaining as in the old funds, which make up 80% of the portfolio. They all have data for the first 5 years. They will all be proportionally increased in their portfolio weight to make up for the 20% where there are no funds right now, right? All the way up to the 5-year period. As soon as the new funds come in, their weights will go back down to the correct number. So that means in the 10-year backtest, when the old fund data is not available, the remaining funds where it is available, they are scaled up proportionally.
So what you
Then
suggest us, like, sorry,
Yeah. Please go ahead.
yeah, I'm just saying that just a follow-up question on this, that what you suggest us to do, like there might be schemes which, it's not necessary that schemes are lasting for like two schemes are lasting for 5 years. It might be possible one is lasting for 2 years or launched just 2 years back, or maybe one is launched 5 years back. So there
Yeah.
may be a difference in the launching years, right? So
Mhm.
what you suggest us to do, should we go for yes or should we go for no to have a correct answers, or what exactly we are
Look,
looking?
the thing is that if you have quite a few funds which are new, and if they're, let's say, taking 30-40% of your portfolio, if you select no, right, then half your portfolio will give no return for the initial period, which is not good because it will give your clients and yourself, you will see the return is quite bad because half your money is making zero return, not even FD, nothing, right? So that will be, it won't make sense to kind of go with no, unless you want to be really exact that, I only want to count exactly as per my weight. If you select yes, what happens is the rest of the portfolio, something like, let's say you put 30% on a particular fund. If you select yes, that percentage may go up to 38 or 39 to make up for the empty space in the portfolio. Empty space that is caused because of the new funds in the beginning part of the backtest. So ideally, our suggestion would be to go with yes. And if you really want to run a proper, accurate backtest, then the absolute right thing to do is to go to start date. Actually, just go to start date. And you can see the minimum common start date. This is the date where all the funds have data from. So if you run the backtest from this date, everything will be in line. But if for some reason you have a couple of new funds in here, then this start date will become only 1 year ago or 2 year ago, which may not be enough. In that case, you have to run a long backtest. So my suggestion would be you go with yes.
Okay.
so
This is
I agree that it should be yes, but your
Hmm.
default is no, is what I'm getting, is what
Yeah,
my
yeah. I'll tell you, sir, the reason that it is no is because the minute you select yes, that means when you say 30% on Kotak Flexi Cap, which is, I don't know, I think it's a long fund. What we are doing is for the first half of the portfolio, you have said 26, but we are running the backtest at 32 or 33 or something to make up for lost space. So what we don't want to do is run a backtest where we have changed your weights by default, right? So that is a safety, just for safety, we have by default set it to no. And one thing we can check is, actually, if you can go to settings, see if there's a default. If there isn't, we can create that. Is there a default? Yeah. So there is a default setting in your application. You can set it to yes, and every time it will run as yes. Then you can change the default here.
Okay, got it.
Yeah.
Can I ask my question or should I
Yeah.
wait?
Please go.
About this rebalance, what is this rebalance fixed rates?
So this basically means that when you run the backtest, there are so many funds here. As time goes by and as the funds are changing returns, they will basically change in their percentage holding, because if you're holding a fund for 20%, let's say 20% of your portfolio, and the fund itself goes up by 50%, let's say, then your weight will become higher also. So what it does is it rescales the portfolio weight over time back to 20, right? So fixed weights is our strong suggestion that at all times you should always use fixed weights. However, some clients have asked that they want to see what would have happened if they started with those weights, which you see on the left, and just left the money. What would the returns look like? So there is a slight difference between those two options. We would strongly suggest not to use leave invested. Fixed weights is the right way to kind of run a fair backtest.
So my question is, right now when you say fixed weight, and here Kotak Flexi Cap is showing 26.04%, which
Yeah.
means that for last say 5 years or 10 years, whatever the period is collected,
Mhm.
the 26% remained there, right?
Yes, that's right.
So
It did not change.
can you, with an example, can you show the difference between the two? This is something very important.
Yeah.
Because
So
this conceptually also important when I'm showing to someone that, okay, this is my percentage of portfolio, this is there for 10 years. And while in these 10 years, some fund scheme may have given 10% CAGR and some other would have given 25% CAGR. And obviously the portfolio proportion would have changed. How
yeah.
does it affect? Can you explain a bit more so that it.
So the difference here is in real life. When you put this portfolio on, let's say you put this portfolio on today, right? That 26.04%. In 1 week from now, it will not be 26.04 anymore. It'll be something different. Because obviously you put this portfolio on today, you have not changed anything for 7 days. Market has moved, the fund NAV has moved. So that 26 will become slightly different. Then the next 20.83 will also become slightly different, and so on. It will keep changing as time and markets move.
Yep.
So in reality, we are not actually rebalancing the portfolio every day. That's too impractical and too costly. Generally speaking, people would technically just rebalance their portfolio once a quarter or once every 6 months or something like that, to make sure that if the 26 becomes too high, like 26 becomes 28 or something, you might sell a little bit of Kotak Flexi Cap just to bring it back to 26, because what you really wanted to have always was 26. Now, that's what we do in reality. But when we are running a back test, what we really want is a normalized portfolio line. We're not really back testing what would have actually happened if I did this 5 years ago and then left the portfolio and didn't touch it. If you do that, then you select leave invested. The returns will change slightly, because even in this case, we are normalizing the weight back to 100. So for example, just select leave invested. The returns change a little bit, but the difference that you see in the returns is because now we're not rescaling anymore. We are letting the weights change over time. Now, our um, our thought process here is there is no point in looking at this, because this is a very specific situation. When we use fixed weights, which is what our suggestion is, you actually see a normalized line, regardless of when you started, when you ended. It actually shows you what is the performance of this portfolio of 26%, 28, 20%, 15%, 10%, 10%. You want to actually see over time the performance of that portfolio, not a portfolio where the weights have changed because of compounding. So that's the reason that we feel that fixed weights is the right approach.
So, can I give you my version of what
Yeah,
I
please.
have understood? So, when I say leave invested, and if I take a period of say last 6 years or 7 years, which means that 7 years back, I started with this portfolio where Kotak Flexi Cap was 26.04%,
Yeah.
and I didn't change the weights in between.
Yes.
And then what would have been the return? Now this 26% would not be the current position. It is the position which was 6 years back.
Yes, that's right.
Right now the situation may be different, right? Is what you
100%
mean?
will be very different. It will be very different because obviously,
in leave
quoted flexi
invested.
cap. Yeah. Now the only way that all those weights remain exactly the same is if every fund increases with exactly the same return.
Yeah.
The reason Kotak FlexiCap's position will go up is because relative to the other funds in the portfolio, it has done better. If
Yeah.
it is relative to the other funds in the portfolio, it's done worse. The 26 will start to go down.
So this is leave invested, right? So
Yeah,
if I've taken a period of 6 years,
yeah,
then 6
yeah.
years back it is 26.04%, and now it is something which we don't know
Different.
as of now.
Yeah.
Right now we are not in a position, neither we want to know nor in a position to
Yes.
say what it is.
Yes.
What happens in fixed rate? So 6 years back we started with this portfolio.
Hmm.
What happened, say, 1 year after? So 5 years back, what happened is what my question is. What
Yeah.
happens
With
now?
fixed rates, we calculate every single day's return individually using these weights only. So whichever date you pick between the start and the end date here, whichever date you pick, the next day's return will be based on the change of fund NAVs for every 1 day. And that return will be applied to 26.04, 20.83, and so on. So every day's return is calculated as if you invested the previous day. What this does, why this is useful, even though it is theoretical, this is actually giving you the correctly calculated historical price of this portfolio, which is really what you'd want to see. Because it's like, for example, if you were just looking to buy one stock, let's say you wanted to buy Reliance, one of the first things you will check is what is the historical price of the Reliance stock. In the same way, if you're investing in a portfolio, the first thing you should want to check is the historical price of that portfolio. The fixed rates return that you see in the blue line in the chart, that is exactly that. It is the historical price of this portfolio normalized in the sense that it is not changing the values just because last 2 months have been good, so the weights have changed. We have kept the weights constant, which is generally speaking always the method whenever we are using any kind of backtesting methods. And this is also industry-wide, is always used.
No, understood.
Yeah.
So now I got it. Thanks.
Okay. No
Third
problem.
is third is can you go down and explain me? Yeah, please go down in the same up capture and down capture ratio. Like it is showing 97.18. So it is, if it's below 100, is it good or bad? Down capture below 100 is good, but up capture below 100 is good, bad. So what does it actually mean is what I try to want to understand.
Yeah, sure. So up capture basically shows the relationship of this thing against any given benchmark, right? So whatever benchmark you've chosen, up capture and down capture ratio will show you what the relationship is. And the way it's calculated, up capture, for example, we look at all the periods where the benchmark was up. As you can see here, right? All of the periods where the benchmark was up. And then we try to see what happened to the portfolio or the fund, whatever you're looking at, during those months. So, and the number that you see below, if it's below 100, that means while the benchmark was going up, the fund underperformed the benchmark. Similarly, on the other hand, for down capture ratio, we only consider the months where the benchmark was down and then see what the fund or the portfolio did during that time. And if it beat the benchmark during down periods, then it will be the up capture ratio will be better. So basically, this is showing what kind of performance you expect from the asset during up markets or down markets, especially if you use a benchmark like Nifty 50, you can kind of get an idea that maybe this fund, for example, does quite well during down markets because it outperforms the Nifty, for example.
So you mean
So,
that in down capture ratio, when
Yeah.
the fund goes down, when the
When the
benchmark goes
benchmark,
down,
yeah.
the fund goes down less than the benchmark, less than.
Yes.
How many
It
times
just,
it goes less than the benchmark, right?
yeah. So it basically totals up the performance of the fund versus the performance of the benchmark in down periods only.
Mm-hmm.
So if the
So,
fund has done better
uh-huh,
in total of all the
uh-huh,
down periods, or on average, let's say, then the up capture ratio will be over 100.
over 100.
Yeah.
Over 100 or 100 only?
No, over 100. So more, the more above 100 it is, the better it is.
But
The more and more, yeah.
how will it be above 100? Because you are capturing only when the benchmark is going down. So that is your 100. So
Oh, so it's
within
just
that,
calculated in the reverse way to give a, it gives you the same thing. It's calculated in the reverse way.
okay. Can you explain up capture again?
Can I just
Ah.
suggest you one thing that
Yeah.
let somebody from our team give a
Fair
proper
enough. Fair enough.
training
We
to
can do
him.
this.
Yeah, I think
We
this
can do
webinar
this
is going
separately.
long. Yeah, so let
Fair
it
enough.
be. So Ashi, just take down the number and make sure that this proper training is given.
Yes.
Yeah.
Perfect.
So yeah.
Yeah. We will go through this properly with you separately. Yeah.
Yep.
Thank you.
Yep.
Thank you. There any other questions?
One follow-up question on this itself, though it was not completed. So one takeaway, just let me know if I'm correct. So upside capture ratio usually is like if more than 100 is good, and downside capture ratio is like if it's close to 100, it means it's outperforming the benchmark in downside market.
Yeah.
Right? So it's
That's right.
like it's near to 100 or more than 100 is good in both
Yeah.
the cases, upside or
That's right.
downside.
That's right.
Yeah, great. Thank you.
Yeah. Thank you. Any other questions? Okay, if there's nothing else, Ashi, we can close for the day.
Yes, sir. Thank you for joining in. You can anytime view our past recording on our YouTube channel. There's a dedicated webinar playlist that has been created to cater your requirement. So thank you again and happy weekends.
Thank you.